What is going on? I think you can hear me this morning. Hola. Did you guys see? Yes, keep going. It was like the worst timing. Beautiful. It was the worst timing for me this morning. So I'm looking at this. I'm like, I just entered a short, and it starts to pop up a little bit. I'm like, oh god, dude, too funny, too funny. You guys would love it. So, anyways, I'm gonna trail out of it because it's not like the biggest thing. But anyways, this was the short. I was like, enter, pop up. Oh, gotta start the stream. We'll see. We'll see how she goes. I don't know. I'm just gonna trail out. It's small. It's Monday. It's Monday. We'll see how it goes. Welcome everybody. By the way, I got a couple crew in here. I think Sharky's gonna join us later on. It's a funky time just because that trade just started to work a little bit, but anyways, we'll see if he gets some time back. I was like looking at the rest of the crew. I'm like, what else is everybody doing? I was like, yeah, they're looking kind of short to FOF. I'm like, uh-oh. But hey, I will say it looks good overall. It's just like just looking for a little. It's what? Auto Shark, what's up, man? Anyways, we'll see. The market's moved a lot in the last week or so. I mean, a lot. So it does make sense overall just to see a little bit of a pullback. But the question is, are we out of the woods? And this is the Angry Bears. So I think that's what we're gonna find out this week. It's looking good to at least find out some clarity. If you're new to the show, basically what we do every Monday is kind of like get together with the crew. I'm in oil calls. Oh gosh. Yeah, I actually like oil. The USO is one that I will look at today. I like the spot, but does it break out? I don't know. It's a good trading range, I think. So anyways, that's kind of what I'm looking at. But again, if you're new to the show, every Monday we basically kind of come on and take a look at, hey, what's going on in the market right now? What do we have to look forward to? What happened last week? What are some of the kind of like highlights, things like that? And some headlines that may have hit that you didn't maybe catch, and what's coming up moving forward. So that said, I think just some quick highlights of last week. There's this we don't talk about a whole lot. It's the Fed's preferred wage metric. It's different than inflation metric. The wage metric that Fed looks at is something called ECI, or the employment cost index. And that actually, what's up, Frankie? That actually, if that's a wage thing. And so the last couple FOMC meetings, Powell's been talking a lot about labor, and wages, right? So, the stagflation word came up a couple weeks ago. A notable commentary from Jay Powell over FOMC was like, I don't know what they're talking about. I don't see the stag or the inflation. But the stagflation commentary, we said last week, hey, it's a big word. You don't want to use it lightly, but it came really about because of that, Q1 GDP forecast of 1.6%. I will say the Fed is horrendous at forecasting GDP. I mean, absolutely horrendous. So it's the first look at GDP. We get 3 of them. So that said, I don't know how much stock I'd actually put into that. Overall, I mean, some of the other market data points, home prices accelerating again, consumer confidence slumping to lowest since 2022, and JOLTS job openings are at 3-year lows. So net, I mean, that's the data view in a nutshell. Some of the FOMC highlights, I think, there are 2 things. I don't think anybody expected a rate cut by any means. That was not priced into the market. Actually, a rate hike was like thrown around in commentary. Frank D Tank, yes. Rate cut hike was thrown around. But again, one of the biggest things he did say is like, look, there's no way, unlikely to be the next move for a hike. And that, when the notes got released, I think that just kind of like set the market off. Plus, the market was really expecting some like hawkish commentary. When I say hawkish, like, not looking good kind of commentary. And he sounded a lot better than people would think, right? The biggest thing that they actually did do was this balance sheet runoff. If you're not familiar with that, what we're talking about, that's like the bonds and things like that. They've been buying about 60 billion a month, I believe, and the market was actually expecting that to drop down to more like 35 billion, but the actual release said 25 billion. So that's a big deal, and that's going to move the bond market quite a bit for sure. But that was the biggest actual change that happened that day. In terms of commentary, again, it was like, not, the tone wasn't exactly what was expected, but that's why we got the biggest move, right? Unfortunately, it wasn't anything big enough to hold a market move, which is why we saw the whole thing just completely reverse course that same day. And honestly, that day, that FOMC day, that was insane, right? So we moved the length of an average day within 60 minutes to the upside, and then within 60 minutes or less, reversed the whole thing to the downside. So, and we actually ended up closing that day almost unchanged from when his speech started. So, so again, nothing really market moving, kind of like a non-event overall, a good trading session. If you caught both sides or either side or any of the sides, who knows, as long as you took profit. That's true. And then Friday, we actually got non-farm payrolls, which is kind of like the lowest one here. And we're really back to like that bad news is good news, if you didn't figure that out, right? So the market was expecting 243,000 jobs. Last NFP, we actually got 175,000 jobs, which, when Powell's talking about the labor situation, the less jobs that we're taking, the better, in terms of like looking forward to that rate cut. And it makes sense too, because all the high end NFP numbers that we've been seeing are, when you looked into the numbers, most of it was coming from government payrolls. And so government payrolls were the ones that like significantly slowed down this time. I think that was probably ramping up for maybe, probably ramping up for the election, and we'll likely start seeing that come down moving forward as the election gets closer and closer. So I would expect that to be the trend. And in the meantime, we've got, Tesla, Google, and other large companies actually laying off a lot of people and getting a little bit tighter around the belt in terms of their spend. So, lower NFP numbers moving forward, I would actually expect to continue to see, which is probably going to be a good sign for the market longer term. So in between now and then, it could be a choppy ride, but longer term, that's what we want to see, is that trend start to at least stabilize to the lower end. So anyways, with that NFP data, that put the kind of like that September rate cut back in play for the market. I have a couple slides that I didn't update on this CBOE consumer confidence, so I'm going to go ahead and move forward. That's mostly, last week headlines. I mean, we did see some Apple stuff. If you guys are looking at Apple, hey, look, $110 billion buyback, the record-breaking largest in history. I think that's cool, but as an Apple shareholder, Apple shareholder, my biggest thing, and I'm just going to talk about it just for a second, was that they're coming off of like a down 5% quarter from the March quarter, and actually, I think it was in the Q&A section, Cook said that he is actually expecting 1 to 2% growth next quarter. And if you kind of move that forward, I'm really interested and intrigued in Apple long, even if it comes down a little bit, just because I feel like, near term, the analysts will probably debate, hey, is this even a growth company anymore at all? But the numbers, if we continue to see a 2% growth per quarter moving forward, that would put it at like plus 2% next quarter, plus 4% September, plus 6% in December. And all of a sudden, we've been able to pick up Apple when everybody thought it wasn't growing anymore. And now all of a sudden we have a 6% increase, for the year. So that plus they're coming up against really, not plus, but that does actually put them right up against some easier comps in comparison quarter over quarter. So I like the setup longer term for Apple. So if you guys have any tickers or anything like that, go ahead and drop them also in the comments. Uh, I don't know if we're going to see Starkey. He would have been here by now if he was going to come, so probably not going to show up today. But anyways, let's move forward. So earnings this week. Last week was big. This week is actually going to be bigger. This is the economic calendar. I don't see anything major on the calendar that we should actually worry about. So that really brings us to be able to focus, at least the market, to be able to focus on earnings. I think so far it's been decent. There's some things that have me a little bit weary. And if you guys know, hey, going back to that last earnings stuff, we were really peaking out in terms of like we had 29 beats last quarter, 1 miss, literally the best I've ever recorded. We don't have any Dow 30 components, and that's only the Dow 30 by the way. We don't have any Dow 30 components reporting this week. But Amgen was a big one, right? We do have Celsius this week. That's going to be a huge one to watch for sure. Disney, I don't know. We'll take a look at Disney. Disney was hyped a lot, but it really hasn't gone anywhere since the last earnings report. So we'll have to see. And Shopify for sure. If you don't know, Rubrik. So I love Rubrik as a company. I'm really not sure if I like it as a stock yet. I tried to dig in a little bit of the numbers, and I'll be honest, I kind of blindly bought some of the stock, but just started instantly dying. I'm like, I need to look at this a little bit more. It's really high, it's really expensive. So I don't know. The growth rate isn't it's not really comparable to Datadog or anything, but I love Rubrik, the company. I've always said it, or I've said it a bunch of times, coming from enterprise technology, there were two layup sales, and that was Palo Alto Networks, meaning all I had to do was drop off a demo box and give them the product to play with, and they would just end up buying it. And then the other one was Rubrik. It's these products just work, and they work just a million times better than the competition. So anyways, that's where we are. I think it's going to be about growth for Rubrik, and the last numbers I saw was 5% growth, which I don't know why they would go public with just 5%. I don't know. I feel like that's low. We'll see. But there's a ton of auctions again this week. So JPAL says, hey, look, we're not gonna be buying as many bonds. We got a 3-year note tomorrow, a couple bill auctions, 3-year note tomorrow, 10-year note on Wednesday. That's actually going to be a big one. And then a 30-year bond on Thursday. So even though they said what they said, look, seemingly every day this week, we have bond auctions, T-bills, notes. So yeah, we'll see, right? So if they are not going to be issuing as much debt, then this will probably be the last hurrah for some of these, which means that, there might be a decent amount of interest and push those rates down a little bit lower, which could be good for the market. We'll see. And then consumer sentiment on Friday. But overall, there's not a whole lot on the calendar this week. A ton of Fed speeches. Again, that just really brings us to the biggest deal, and that's going to be earnings, right? And so it's another jam-packed week of earnings. You guys caught it. So tonight, after the close, the biggest one, Palantir, I think everybody's going to be watching. That's a huge one. We can take a look at this. ANF, does ANF report? Oh, I saw them this morning. They're back over 130. I'm like, oh goodness. I don't know. So the CEO, where is ANF? Is it here? What day? You guys tell me. The CEO sold 40% of his shares. And I'm like, that's a tough one. It instantly makes me bearish, but it doesn't, they could sell the shares and then get them granted back. So it's not necessarily that big of a deal. But yeah, I think Palantir today, some people are actually watching Hims and Hers. A lot of people like that. And then tomorrow morning, Disney, Celsius. I'm going to tell you guys right now. 522. Got it. Okay. So we got some time. I'm going to tell you guys right now, Datadog of the entire week, the most important earnings call that's going to set the tone for the week is going to be Datadog. Believe it or not, right? So Datadog will affect our Snowflake positions if you have any. will like the Winter Soldier, Snow, Bucky. That it's the biggest one, right? And Datadog, if you're not familiar with them, they're like yeah. So I think Datadog, we'll take a look at all of these in a little bit. I'll just say Datadog is the highest flying software tech stock out there, or one of them, if not the anymore. And their whole thing is like cloud efficiency, right? So they monitor. It's like a efficiency, like a monitor that goes onto your cloud database or workload and tells you what you're doing, what you can do to improve, and where you're overspending, and it helps other companies be super efficient. But Jassy, Andy Jassy, AWS, he was the prior CEO of Amazon Web Services, now just CEO of Amazon, said in one of the last interviews that cloud optimization, which is what they call this and what Datadog plays in, cloud optimization is not so much a thing anymore. So the question's really going to be, has Datadog been able to move their focus over to have they been able to get into that AI workload, right? Because AI is a specific workload. And do they have a play there? I don't know, right? And so that's what we're going to find out, right? I think, yeah, they'll probably do okay, but expectations are probably also very high. So I could see a decent pullback. Very expensive stock, very expensive. And if they do pull back, then do expect Snowflake and the like, in terms of meaning in the IGV or software sector, other software names to get hit at the same time. This will set the tone for that entire cohort. And the biggest maybe tell could be Cloudflare, right? And we'll take a look at Cloudflare. That's NET, ticker NET, last week. Very similar, right? Also extremely expensive. Also a lot of high hopes. They didn't do so well. So can Datadog save the day? TBD, right? That's what we're going to find out. A lot of the oil names are on deck. So we have like BP and some others later on. I think we have Oxy coming if we haven't gotten them already. I might be wrong. Oh, BP's coming. Oh, Oxy, Chevron, Exxon were all last week. So those are out of the way. Oh, Oxy tomorrow after the close. So we'll see Oxy. Arista. Again, Arista is going to be like an AI tell also. So Arista is, they've done decent. They had a nice bounce off 240 just the other week, right back up to 270 something. Again, expectations are high. I do own it. I'm not doing anything with it. I'm not going to hedge it. I'm not going to, I bought a lot lower and then I re-entered just recently. So if it does go lower, I'll probably end up buying that dip. But Arista, in terms of edge networking, is probably like your one real play. I know there are other plays out there, but again, for the specific workload of AI, oh, there goes my shorts. Frankie, there it is. You got to take that little profit. All right, get over there. Get over to the brokerage. Sorry. Oh, I should let it go a little bit, huh? You guys. We're doing it live. Live trading. I mean, that was like one of the first targets right here, pre-market levels. 513.50, 513.30 were the real primary targets. And then 512.50 stretch, pre-market lows, ultra stretch. But this was that last breakdown. So we'll see. I feel like you just got to take some. Just because it's been a crazy hold. All right. Let me send that update. Is it early trim? Oh God. Oh God. Anyways, poor Shark, he missed it. He's probably trading that right now, and the rest of the crew. Anyways, yeah, so Arista is going to be really important. I think two most important, Datadog and Arista Networks. That's going to be a lot of read through for both their sectors. Arista is going to be read through. I'm still long Dell. I love Dell. Dell's doing really great this morning. But if Arista doesn't do well, Dell's going to get hit. We need to know that, right? And if you're not fully positioned Dell, I do like Dell in terms of like for the AI workload. There's a huge moat on Dell. They sell every piece of the enterprise. And again, AI is different than the full enterprise. Shark's not even talking in voice. You guys should ping him and tell him to get into the stream. Anyways, Dell, if I do see it under 110, I'll probably pick some more up. We'll see, right? I don't know. I'm more positioning myself for the rest of the year right now. I don't think this AI deal is done. But can we still get some dips to buy within the next month? I do think so. And so that's really what I'm looking at. Anton's killing me. Oh God. Anyway, so yeah, Twilio is an old, cloud play way back when. I don't know. They do that push to text stuff. Lyft and Uber. So usually Uber doesn't move a whole lot on earnings when it's right behind. So one of these is going to be, so Lyft first and then Uber. I think you can read through some Lyft. If Uber gets the move before when Lyft reports, then I think the Uber trade is neutral and do not swing into earnings because they don't usually move that much, to be completely fair. Uber is not one that I usually swing stuff on. Neither is Disney also. So Disney, a lot of times the Disney trade is on their investor day. There was a lot of move into that. Similar to Apple, where the Apple move isn't necessarily on earnings, but into that WWDC conference that's coming up in a couple of weeks. So that's why I still like Apple if we get some like dips to buy. I haven't even really looked at the market right now. So Shopify, super interesting. I mean, it's getting a little love this morning, but it's still under that 75 level. It's not gonna be till like 85 something that it really actually kicks off. And then ARM, what can we say about ARM? The one I'm really looking forward to, look, there's so many this week, man, so many, is Robinhood. I think that the Wells notice they received this morning, so Robinhood did receive a Wells notice this morning from the SEC regarding their crypto business. This is one of the reasons why I always liked Robinhood, is because they never really got a ton of love from their crypto trading, although they do provide it. So I think they make money there regardless of whether or not they actually get that piece of their business taken away. I think Robinhood still is gonna catch a ton of upgrades, man. I mean, the biggest bear case for Robinhood over the years was that their average user portfolio is so small, right? And then we look at it recently, it's just been growing. And as it's like moved forward, it's just like they've gone into IRAs and Roth and all this other retirement stuff. I mean, it's just really like the average user balance is just growing. And now with this new gold card, it's just going to be that much better, right? So I still like Robinhood. Sorry. And then Trade Desk is going to be a big mover also opened up in the UK market, but no options. Oh, I didn't know that they don't even have options in the UK market. I mean, geez. Oh, that's probably because of payment for order flow stuff. So payment for order flow is part of their business model. I don't know that that's really a thing in the UK, especially since they're different type of options. Options are completely different. But we'll see that. I mean, they do not, yeah. So it's an interesting one for sure. I honestly, I think Robinhood's just so like it's a sleeper. We'll just say that. Does it go up? I hope so, but I don't know, right? I think even if it does, it might be muted because of this Wells notice from this morning. But long term, hey, look, long term, I bought the thing at $8, right? And I've done my selling. I'm not selling anymore. If I get dips, I'm probably going to buy it back. So, Yeah, I'm familiar with Tasty Trade and actually Aries is probably the best one for European trading that we've really come across. Um, but yeah, I think those are the big ones for the most part. Some people might be watching Roblox. I'm really not really into Unity either. Definitely not into Plug or like the earnings. Um, you know, but I think that's right in the middle of it is the meat of it, right? Kicking off Tuesday morning. So we'll see how that lands us really for the week. Let me just move forward. Oops, that was a little I gave Sharky some time, but he might not be here in time for it. But you guys ready? Because I'm ready. I think we should go over to Miss Cleo and then we'll take a look at some charts for sure. Ready? Let's do it. All right. So, welcome to the part of the show that we love. He says, wait, we're here. It's time. It's time. Miss Cleo has joined the show. So, this is the comedy hour, if you will. But I mean, crazy. So, this person does like tarot card reading. And, it's take it for what it is. It's funny. It's fun. But it's insanely accurate. Like, it just blows my mind. So we do this little segment. But anyways, this is the view essentially this week. It's like top card is the theme card. Then we have Monday, Tuesday, Wednesday, Thursday, Friday. Today's card is death. And I think, when I sent the preview, we're like, ooh, not looking good. But in reality, it's not so bad. But anyways, let's go ahead and take a look at the rest of what this actually looks like. So the theme card, and I just kind of chopped this up so we can zoom in just a little bit. So the theme card is the 7 of Swords, right? So a lot to say here. First, we had 9 of Swords last week. So getting to the 9 to 7 signals regression. So this could be spent retracing last week's gains. Side note, so last week we had NFP, and I will give you guys the levels that I locked last week. And I don't typically swing into anything on the indices after a non-farm payrolls data point, because there is very, very often, more often than not, we'll spend a week or two retracing that prior Friday's range. And so right now, without extending beyond this opening range, it's kind of what I'm looking at. Like, we could retrace a little bit back to that Friday low, which, as an aside, non-farm payroll days, and we can even look at last month, right? Very often are the high or the low for that month. So again, probably going to be the same thing. So anyways, ton of negative energy. Ton of negative energy in this week's draw. Doesn't bode well for the bulls. Card often signals a trap or bullying of some type. It could imply that there was a bull trap last week, or that the week will be spent setting a bear trap. One of the two, right? Look for deceptive price action. Don't get lulled into a bad trade. All right, so today's card, and we'll just go side to side. So today's card was death, right? So they start the week with a forced transition. This card skews bullish. Ta-da! Who knew, right? Historically, so there's a chance we can rally, but before, watch for traps. So I think if Sharky was here, he'd be telling us that, hey, look, it's about new life, right? Transitioning out of the old into the new. Looking at data, this card almost always sets up mean reversion trade for the following day. So that is, she's legit saying turnaround Tuesday. Okay, that's a thing, by the way. So turnaround Tuesday on the following day. Treat this one as pivot and the end of a move. End of a move. Yeah, there you go. Take profits and set up the next trade accordingly. So she thinks that this is the high for the week, is what she says. Sounds like. Tuesday is a 3 of Swords. So this is the one that like, if I do this, it's like 3 little swords right through your heart. So we start off death, 3 of Swords. This is, she calls heartbreak. I don't know. This is 8 of Swords, 3, 5, 8 of Swords, King of Cups, and then Ace of Cups. So we know what this Ace of Cups is. This is like a rally day, by the way, but it's always a rally day that you don't want to swing into long. And if this is right, how I'm reading just this cards is start high, pull back, retest, base, and then small bounce, but doesn't hold through the week, right? So like that's what it says, if that makes sense. So Well, at least that's how I'm reading the cards. So Tuesday, 3 of Swords, heartbreak, grief, pain, and suffering. That's really bad. None of these are good things. We don't have a lot of data on this, but it's usually negative. So that's Data Dog to me. Without the data, we don't we don't have a lot of data, but it's usually negative. It sets up mean reversion the following day. So maybe not even Tuesday, maybe even Wednesday. This could imply back-to-back mean reversion days. Today's price action could be a simple failed breakout, perhaps the final manifestation of Monday's trap. If we're setting on support and feeling weak, expect support to break. Oh, that's ultra bearish. This day we see pain. We see the pain trade. I mean, she's calling the pain trade heavily tomorrow. We will see if she's right. I don't know. But that's a big call out. She's calling a heavy pain trade tomorrow. Okay. Wednesday, 8 of Swords. We're moving from 3 to 8, which means continuation of the trend. More pain. Tricky part, 3 of Swords usually brings mean reversion. So then bounce slightly. However, there's unclear meaning. Better guide our trades. We're feeling stuck, trapped, unable to escape. This one quite negative normally. So don't be surprised if we're one way slide lower. She's ultra bearish this week, man. There's a chance that we can escape by the end of the day and attempt to bounce, but I don't think it brings us flat. Remember, the theme this week is traps. Trappy price action theme of the week. The theme is traps. So the trappy price action means like it looks like it's going to break out and then it doesn't. So maybe look for that setup this week is what she's saying. It makes me think Tuesday may indeed be negative too, but let's see how Monday closes. Thursday's King of Cups. In yesterday's card, we were blindfolded with our hands tied behind our backs, and the water is creeping around our ankles. Oh God, that's a really bad card. Is that right? Oh yeah, blindfolded, hands tied behind your backs, and water creeping up against your ankles. That's no good. Okay. However, there's also very clear meaning to this card. Better guide our trades. We're feeling stuck, trapped. This one. This is no good. There is a chance we can escape by the end of the day and attempt to bounce, but I don't think it brings us flat. Yikes. So King of Cups, in yesterday's card, we're blindfolded, water creeping it. Today we're underwater. Oh, wow. Is that the King? King of Cups is underwater? Is that what that is? I don't know. King of Cups. We're underwater and struggling to escape the waves. This is not sounding good. Wednesday's relief bounce may be minimal or a bull trap 3-8 royal, which feels again series of suggestion continuation here. King does tell us to stay calm and keep our emotions in check. So I think cover Thursday if you're short and she's right. Ace of Cups, one of two ways, depending on which role the ace takes. As a 2, it signals new start. Possible mean ace is not a 2. As an ace, it continues 3-8 royal trend, continues negative pattern we've been facing. Oh, I think it's even worse. There's hope that this card usually skews bullish, but I don't think that's the same suit as Thursday's card. Wednesday, we felt the water coming, got taken by it Thursday, and now it's overflowing from everywhere. Oh no, it's looking. I also want to mention, just because we may reverse direction here does not mean we turn a red day green. Just means the dominant energy will be less persistent or present. If we're near the bottom of the range, I'm looking for a bear trap, dip by. Otherwise, not much to do. Our cards are all silver for the week, which means there won't be a lot of variety and energy overall. It just means like an ugly week to trade. I mean, she thinks the direction's coming. So we'll see. Recap. Window of weakness for most of the week. I suggest selling rallies as a general theme, but otherwise keeping safe and waiting for a decent setup. Yeah, it's a tough one, guys. That's a tough one. So anyways, let's do this. Let's go ahead and pop over to the indices and take a quick look. I'm going to pull up a 30-minute chart. And so this is where we were last week, right? So this is Tuesday, Monday. So last week, if you were around, I said I don't expect a big move. It would be choppy, and I would expect a small move. So the move was down. It wasn't a full average weeks range, but then we literally closed just barely over where we opened. So I mean that's notable, right? Friday's NFP. So this was the Friday low, and this is how I'm looking at it, right? So the minute that the market receives the data, I take in this candle right here, 506.91. That's the minute that the market received the data. I'll just zoom in a little bit. Boom, right there. So, and then the high of the day actually ends up being April NFP high. So similar. So we have a lot of overhead resistance up here. I'm just gonna change this. May NFP high. Okay, so that's synced. So I got two overlapping NFP levels, 512.50. I do think that we retest it, right? And that's really the reason why I was looking short for a little bit. Kind of bounced just now. We'll see. Give it some breathing room, Frankie says. So if we can hold, not necessarily this, but really what I'm looking at is like 510. Like if we can hold in this area, this would be a nice back test. And if we do, at least for the week, regardless of what Miss Cleo says, see something like this, right? That would be, from a weekly perspective, a nice base out. So around 510, I would expect us to like that has to hold for me to be ultra bullish for the rest of the week. Other than that, like this 507 area, a better dip buy right in here. So if I were to have a downside target, it would be that 507 area. I'm just going to move this back to a 30-minute and say, what does that put us at from an average weeks range is not. So an average weeks range now is all the way down to 500 to the downside if this is the high. And then an average weeks range to the upside is 528. So that would be wild. I don't see anything like pointing to me right now to be ultra bearish, especially if this continues higher. Right now, we're just consolidating. So we'll see. We did move, just as an aside. So whenever we move the average weeks range within a 48 hour period, I do expect us to chop. And so right now we have 1, 2, this is 48 hours. We have moved an average weeks range within a 48 hour period. So as of right here, right now, I would definitively expect the market to stall just because of that, right? So we moved, how much is that? So we've moved basically 3%, just under 3% within 48 hours of trading. That's a lot, you guys. So to expect a massive, just over 3%, a massive continuation from here, even though it's Monday, is honestly, it's not typical. If we did see that, it's not normal. And I would expect that to come back and check back to probably that 510 level. So I think that we just kind of base out here. Miss Cleo's got a pretty hardcore read on the market. But yeah, we'll see. The biggest thing right now is like this dollar, right? So the dollar coming in, she could be dead wrong this week. Very possible. Dollar coming in heavily. We've been watching this level 105 and change. This is just, I'll look at the daily really quick. So lower high, pulling back. It's still very high. It's not low enough or high enough to make a massive impact on equities here. It's kind of in that neutral range where it's not going to move the markets one way or the other. I think the 10-year is really going to be the biggest thing, right? So the 10-year pulling back, it kind of basing out today. That's what I need to be on watch for. And I think, of all the indices, what I'd say is that Diamonds DIA looked the best to me. So regardless of whatever Ms. Cleo says, this is a pretty good basing formation on DIA. And if we can actually move higher from here over, 390, 388, and that 50-day SMA, I think this looks better for like that 395 kind of target in the near term. So that actually looks pretty good to me. IWM, again, it's had a really big move very recently. So this, I'm selling some upside calls right now on this guy. I think she can probably take a little bit of a breath at the moment. And Scott's looking at gold. Yeah, so I like gold. I think, if the dollar comes down, I'd like to be long gold. It's pulled back. It's had a nice little like pullback. It's basing right in between these two estimates. It may have some more like wait time. That's what I'm looking at, right? So it's definitely got some more wait time on gold, but if it can reclaim over 20, this is gold futures over 2365 for sure. We're right back into it. And I have been noticing silver creeping up, SLV creeping up over 25, but that's a heavy overhead resistance. So we'll see. And I do like if the market does catch a bid, and so does gold or equities, I still really like GDX, right? So GDX, again, we're over that 200 week simple moving average. We got a little dip by, didn't really follow through though. But this is still panning out, right? I think this is something where I can be long equity. But options are a little bit tough right now. We'll see. This guy is getting tight. It's getting really tight. He's gonna go, but it may not be ready today or this week for that matter. We'll see. But he needs to start cracking some levels in short order for that to happen. Let me see, what else do we have? So USO, so CL, we said we would look at crude futures. CL is super interesting. So the oil status report we get on every Wednesday hasn't really been a major market moving event, but I think that will start to become a market moving event in the near future, right? So a couple of you guys were talking about this. I think gold, so this was the last breakout level or area. So this was accumulation on USO right here, all of this. And we broke out and we're kind of pulling back to get into this little dip buy area, right? So if this is a decent pullback, just swing low, swing high. You're sitting right on that 50% fib retracement. I think it's a decent spot to take a long right at this 78 level right here. And then just look for these like fair value pockets or like low volume pockets start filling just over 80 right now. And then if you get over that, it's 81. We do have a lot of these low volume pockets up to that 83 level on USO. Oh, I'm sorry, USO, that's CL. So USO would be the tradable ticker. Yeah, it's super similar. So we're sitting at 75, just at the 200 day. This should probably come in, maybe some consolidation, but that brings us up like $2 here, possibly up to 79 on USO, possibly. So 75, $80 call debit spread for maybe a month out, something like that on USO. I like that. That looks decent. Decent. And SPY trying to break out here? Oh, you dirty dog. Anyways. All right. Does Exxon look similar? That's what I need to find out. So I liked the Chevron setup. Exxon's still basing. I just don't know if these are ready. CVX. Oh yeah, 2 big days right off that 50. This one's getting really tight here. So I think CVX on pullbacks might be more ready than Exxon, actually. But it's interesting. Nice little channel up. Earnings are definitely out of the way on Chevron. Channel up looks like this. So just tag the bottom of the channel, not the last session, and then crossing up middle right now. All right, guys, we'll take a look at a couple of these. I know you mentioned Shopify, so I will just caveat this. Anytime we're looking at charts for earnings, stuff with earnings coming up, it's not really that great. They do whatever they want to do. So Shop, this is wound really tight. How do you get text attached to? Wait, what? How do you get the text attached to levels like on SPY? Oh, you're talking about TradingView? Yeah, you just put a line, double click it. You can put whatever text you want, just like that. Ooh, SPY's breaking levels here. New highs. There was a buy when I covered the short. You could have gone long. Look at that. Anyway, so Shopify, I think, it's wound ultra tight. If she goes higher, I think that you can very likely see, this is where we were. They might look at this 85 level and this kind of like volume shelf to the upside here, and then downside. Ooh, downside, you have a clear story to play out also. So I don't know, this one looks ultra volatile. It could definitely go either way. Like downside be like $55, upside be about 88. Disney technical levels are looking good, but here's what I'll do. JPM Banks. All right, I like that better. So earnings calendar. We'll just say this. Today you have Palantir, Disney, right? We'll just do a quick look at Disney right now, and I'll show you how I do this. So Disney right now, well, we'll say last six sessions. I'm just gonna pull this out. So 11.5% plus 6.9% plus 4.9% plus 8.7% plus 1.3, 13.2 divided by 6. Average move is 7.7%. Disney has an implied move right now in terms of dollars of about $7. That's not 7%. So they're actually a little bit underpriced at the moment. So 7% upside would put you right back at that 125. $7 and $8. So these are underpriced by $1. And 7% downside move put you right back at that lows at 107. About $8. Implied move is 7 right now, so that's underpriced at the moment, I will say, for Disney. I don't know if you guys figured out how I just did that, but that's how it works. Oh, is that the failed breakout? Yay. Is it trappy? Tell me. Yeah, it's toffee. I'll just say it's not. It doesn't make sense from a statistical perspective for us to carry forward a whole lot from here. So JPM looks better. These are getting real tight. Ooh, that is a decent setup. I don't think JPM falls that much. I think if yields go lower, or I'm sorry, if yields go lower, it's actually going to be better for banks. I think the better ones that we were looking at from a setup perspective, Wells Fargo, Bank of America, these look a little bit better in terms of like where we'll get some upside velocity. Yeah, definitely Bank of America, Citigroup. Yeah, these look juice. So I would prefer like a Bank of America or a Citigroup. The short key texting. I would prefer like a Bank of America, Citigroup over a JPM, unless we're talking equity, right? So equity, I don't mind JPM, but it could pull back a little bit. It had a lot of high expectations in terms of that net interest margin. They do good, but it's going to be a little bit harder. Yeah, GS was one that we were looking at last week. Goldman Sachs, this is just grinding, right? Higher every little bit every day. 1, 2, 3, 4. It's these are like swing plays. Better to swing trade, right? Closing above, closing towards the highs. They'll gap and go nowhere intraday, but then you open at the close and then gap and then go and done, right? That's how a lot of these banks end up playing. If you get an intraday move, it's very muted sometimes, like this intraday, or you have to catch it early. But a lot of times you'll get like that continuation later on. So be super patient with something like a Goldman Sachs. Celsius, you guys want to look at. So Celsius, I don't know what the expectations are. Here's what we'll do. So Savvy Trader opened up a new thing called Earnings Hub. Oops. And I think we can look at that. Celsius here. So these are the prior. Do we have expectations? Estimates. Estimates slightly lower. This is the one we're gonna get. 347 million. So the setup's actually decent if they surprise. And they did. What we will say is that Celsius did renegotiate that. Wow, SPY is just full reverse. Fuck. Oh, sorry. Trappy. Man, if Miss Cleo calls us again, this is definition of Trappy price action, you guys. That's the definition of Trappy price action right there. Holy moly. Wow. Tell Pops is what she said. Tell the big Pops. If Celsius beats, this is what we'll do. We don't have a whole lot of data on Celsius, but they do move massively. Let's just do this again. So 20.4% last quarter. So all I do is I add up the last percentage moves. I don't care if it's upside or downside. So average move of 13.6%, 5 out of last 6 quarters. Yeah, sure, we can say upside. Surprises, 13% would put you right over 87, right into this area right here. Celsius has an implied move of what? So it's 79 bucks of $11. That's overstated. So an average move of 950, call it. Current implied move is $11. Those are not cheap contracts. That's like quick math. Not cheap contracts. This is more set up for like a $90 call calendar on Celsius, if you know what that is, or like a diagonal, buy 85, sell 90. I do like that. Oh, what? Steven Vaughn. Yeah. I love Celsius. That's my boy right there. That's my boy. I love Celsius, but I'll just say that this is, those are a little expensive. I do like it upside. I own it. What can I say? I own it lower, a lot lower. Frankie's just, yeah. But yeah, hopefully, Kenny, that's where the banks look good, but it's the right banks, right? Citibank looks good. This looks really good, right? Wells Fargo looks okay. Bank of America looks good. I like these setups. So Bank of America and Citi look like my best trading opportunities in the banking sector versus, even if we look at XLF, this is starting to look a little bit better. Starting to. And if that does go, yeah, I think maybe we could see JP Morgan a little bit more. What else do we have on the earnings front? Let's see. Oh, Uber. Oh, Lyft. Sorry, not Uber. So Lyft. Sharky's asking about Lyft. So Lyft, I'll just look. Implied move on Lyft, LYFT, is to add the at-the-money put plus the at-the-money call. Lyft is currently trading at 17.40, so I'm taking a 17.50 put plus a 17.50 call. I'm getting an implied move of $4.57 for Lyft. Simple math, right? 35.1% last time, 6, 10, 19.3. Oh God, am I looking at the right thing? This thing moves like crazy. 21.6% average move for Lyft. Good God. 21% is literally off my screen. Hang on. $21 is $3.72. and that puts it right around 21 bucks. Implied move is $4.55. Well, it's expensive. It's already baked in plus some. That's what that is. So upside is going to put you right around 21. Downside is probably going to put you right around that 200-day, around 13. Crazy, crazy, crazy. Let's see. What the biggest one I wanted to do. So the biggest one is really going to be Datadog for me. I think sitting at 125, this is the one I want to see. I think this one tells the story in general. It does move a lot, but 2.4% last time. Did I just do that right? Here's what they give me. So 2.4, 28.5, 17.2. 20% average move. And Datadog sitting at $125.50. I'm going to take a 126 put plus a 126 call together. That's a $13 implied move. What did we say the average move was? 19%. So $13 implied move. 19% is, again, off my screen. Holy crap. What? It's 20 bucks. $23. Severely underpriced. So, average move of 19%, $23. Implied move, $13.90. Severely underpriced. Just based on averages. It's like half price. 20% downside would put you about 100 bucks. Right into that 200 and 200 day and 200 week SMA. Right over here. Also, I kind of like 110 put calendars. Something like that. Selling this week. Buying, what? May 17th. It's 23 cents. I'll risk 23 cents for 110 put calendar 1 week. Yeah. I'll take that all day. It's a crazy inexpensive risk reward there. All day long. I'll take that bet. Okay. All right, guys. I think we're good. Toppy, look at this. Trappy, that's the definition of Trappy and Toppy. I don't know. I'm going to go hang out with the Spaces crew. I don't know that there's going to be a ton of trading to be done. That is a whipsaw if I've ever seen one. Looks okay, but we'll see. What's NVIDIA doing? Yeah, NVIDIA, steady mover. Look at that, 919. Beautiful. All right, guys, I'm going to call it for here. Appreciate you guys all showing up. And that's going to be a wrap. Adios.